Whenever we look at this example, our brain stops, but with the determination of these two main works, we can get ahead of whales and banks. I want to tell you a strategy. Let's start from the beginning. Let's move on to identify the trend in smart money style. We also call it the demand area. Naturally, the upward trend continues on the condition that the levels are broken and new peaks are discovered. In downward trends, lower floors and ceilings are usually created. At this stage, the price respects the opinion of the sellers, which we call the supply range. The continuation of the downward trend is dependent on the breaking of the previous floor, the breaking of the previous ceiling in the upward trend, and the breaking of the previous floor in the downward trend are called BOS. This means that the price has been able to break out and break the previous structure. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. How to trade in a structure. Once you can identify the structure, you will trade in the direction of the structure, but in an uptrend, where should we buy and where should we sell in a downtrend? The answer is simple. Everything is obtained from the beginning of the upswing and downswing of the previous log, after which the price has climbed from a weak bullish candle or a candle of the opposite color. This is the entry zone for you. The name of this area is order block. You can make a good entry in this range using capital management as well as risk management. But where is your stop loss? Your stop and loss limit should be placed behind your entry zone, i.e. order block. Be careful to add a little space to it, because the price can go out of your area by using Shoto and Hunt. But it is natural that you cannot understand the concept of entry in the direction of the trend according to smart money, only with the above schematic. When your trend is upward, we expect a price reversal from the bottoms of that trend to the point where that bottom is no longer valid for us and can no longer prevent the price. In the picture above, the colored bottoms are demand areas, as you can see. Green and orange have been able to push the price, but when the price reached the blue area, it broke. Therefore, the failure of the last demand zone is called a change in character or change of character, which means that after that we expect the trend to change and continue from upward to downward. The change in nature must have hit a level. After our first condition is met, we can proceed with the rest of the steps. Notice if the floor that is broken is BOS or BMS. If this floor has such a property, it is suitable for trading. When the price returns, look for a supply and demand area so that you, as a trader, enter selling pressure and go along with it. The loss limit of your trade is also, it will be above the supply and demand area. Note that risk management as well as market psychology is one of the most important factors that should be considered in your transactions. So far, I have understood what we are supposed to do. But how do we determine which of these structural failures is more important or original and which of them is fake? Look, when a failure occurs in an area, we have to wait for it to reach that area again, but this tool FIBO can help you. When the price hits it, it throws the price up or down in its direction. And the second point is from the FVG candle, we can understand the reversal. When a failure occurs, the price does not rise again, which means it does not register a new ceiling, but a floor. It registers new and lower prices that affect the price of the method. They always have untouchable orders behind the FIBO area and the FVG candle, which do not allow the price to reach them. Receipt with Sharpie or dump will go back down or go up. Another tool that has not been mentioned so far is fixed range. What exactly does this tool do when we see more selling pressure from one area? And this tool is for understanding how long it will go back and one down. This tool specifies the price inputs, and by using that tool, you can see the price in a way that you have never seen before. And if you combine this tool with FIBO, it will be much cooler. In the video below, you can see an example of it. FIBO hidden zone or golden box has fallen. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.